If you had a message for policymakers that have maybe seen this explosion with FTX this week, I know Michael, I don't know if he's in here, but gave an incredible CNBC recap and was really laying out what seemed to be some talking points for policymakers with respect to commodities and securities in this space, and there only being one that's a digital commodity. What are some of your thoughts, and do you have some words of your own if a policymaker was maybe listening to this?
I think the first step is to understand the difference between Bitcoin and everything else in the space, right? So Bitcoin does not pass the Howey test, which is, I know it's jargon for some people, but basically it's a test that's been around for many decades to determine if something is a security or not. So Satoshi didn't raise capital. He just kind of put this open source code out there. He didn't pre-mine it himself. And there are multiple things. If you go through the step-by-step list of the Howey test, Bitcoin clearly does not pass it and therefore is not a security. Whereas when you apply that same test to other cryptos, the vast majority of them seem to pass that test and are likely securities. And some of them have been specifically ruled to be securities. Other ones is still technically gray, but when you actually look down at the list, you're like, it's probably a security or basically an equity. And so I think we need more clarity from exchanges, and I would agree that Michael gave a good talk about that. I think we need more clarity about regulation onshore, and I think the main thing is for policymakers to understand that Bitcoin is very different from everything else in the space, and that its nature is not inherently speculative in the same way that other things are. Right, so you can speculate with Bitcoin. Many people do speculate with Bitcoin because it's a volatile new asset. People are going to speculate with it. But the underlying use case, why it was designed and the way that many of us use it, is not speculative. And I think I think we're going to see a bigger and bigger divide between the Bitcoin-only space and the rest of the crypto space. And I think over the past couple of years, with the rise of Bitcoin-only companies, we've seen that divide growing, I think, and it's only going to trend. And of course, there are other things like stable coins and things like that that are interesting too. But outside of, say, Bitcoin and stable coins, I think a lot of the other part of the space is really going to be delegated to the realm of casino land. It's things you're speculating on, and I think a lot of that's going to be. I think we've kind of seen potentially, and this famous last words, I guess. But it's like we've seen, I think, the high watermark in terms of how much speculation that can happen at once in this industry.
I hope so. I hope so.
Well, I would tie it into the prior macro thing. We've had 40 years of lower and lower interest rates. And towards the end of that cycle, we hit zero interest rates, and we gave everybody free money. And we had this huge 40% increase in the broad money supply in 2 years. And then you have this rise of all the scams. It's really hard to mimic all those conditions happening again. So famous last words, but I think that we're going to see more bubbles, obviously. Bubbles never end. But, it's human nature to find bubbles and create bubbles. But the sheer size of this latest crypto bubble is really hard to replicate, and I think it opened a lot of eyes to the dangers of most of this space.